Hello, today is February 9th, and we want to give an update on GameStop. On February 1st, we wrote this article called the GME Gamma Trap, and what it expressed was our view that because there were so many call options in GameStop, that as those call options got extremely expensive, as you can see indicated on this chart here, that options dealers who were hedging those call options would have a lot of stock to sell. And as GameStop stock traded lower, those options dealers would have to sell more and more and more stock. If you look at this chart here, the blue line is the price of stock, and these dots indicate essentially the price of options. And you can see how high those price of options were when we wrote this article. Now, what happened was the 60 strike, there was a lot of calls in that name, and so we knew that dealers would have a lot of stock to sell until GameStop stock hit the $60 price. And what's happened in the name is really fascinating. If we flip to the chart, you can see that the stock, which if we zoom out slightly, was around $225 a share when we wrote the article, has crashed back down to exactly the 60 area. So if we zoom in a little bit, you can see that this 60 level has played a major support line for the stock over the last week. And now today we're trading down to 50. Well, what's significant about 50? If we flip to our Equity Hub tool, which allows you to analyze over 3,500 different stocks and ETFs, you can see that there is something called the hedge wall at the 50 strike. And the hedge wall is where our model detects major hedging support for a name. And so as the stock trades down into the 50 level, you can see that our model detects support, and that is exactly what has happened. Again, if you look at the chart here, you can see that there was a test to break 50, but that price is holding. Again, looking at the Equity Hub, the other level that is still in play here is the 60 strike. And if you see this chart here, this shaded pink area is our volatility estimate. So the higher this indicator goes, the more volatile we think a stock will be. So there's a lot of volatility in the name between 50, which is huge support, and 60. So what that means is that this name could easily revisit 60 by Friday's close. And that is the Friday, February 12th. And what's important about Friday's close is that 30% of the options position in gamma terms and 23% in delta terms expires on Friday. So what does that mean? That means that dealers, one, have a huge position to unwind. We think that's probably mostly call positions. And then second, the hedging pin that is at 30 is going to be removed. So you're going to combine this fact of dealers have stock to sell as a function of delta unwind, and then two, the pin that they had at 60 is now gone. We think that likely means the stock comes under more pressure next week and leads to a final break of the 50 strike price, and we think it ultimately returns back down to the 20 or 30 price level. If you found this analysis helpful, please visit us at SpotGamma.com. We are also at SpotGamma on Twitter. You get a free 5-day trial of the Equity Hub product, as well as daily written analysis on the S&P 500 and NASDAQ indexes. Thanks very much.